Based on the historical data and forecast, Bitcoin exhibits a mixed trend with periods of volatility. The support price consistently remains at $95,000, while the resistance fluctuates around $106,700. The RSI readings indicate that the asset is generally within a neutral range, occasionally dipping into oversold territory but rarely reaching overbought levels. The Bollinger Bands show that the price has been oscillating within a defined channel, suggesting potential for short-term price swings. Considering these factors, I recommend a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. My proposed strategy involves a tiered approach. First, initiate a long position at $102,800 when the price touches the lower Bollinger Band and the RSI is below 40. Set a stop loss at $101,600, just below the lower band, to limit potential losses. The initial target price is $105,300, aligning with the forecast price and the resistance level. If the price reaches this target, consider moving the stop loss to break even to protect profits. If the price continues to rise, a second target can be set at $106,700, the resistance level. Conversely, if the price falls below the support level of $95,000, immediately close all long positions to avoid further losses. This strategy balances risk and reward by utilizing technical indicators and price levels to identify potential entry and exit points. Based on the historical data and forecast, Ethereum exhibits a volatile trend with periods of consolidation and upward momentum. The RSI values fluctuate between 46.2 and 67.2, indicating both oversold and overbought conditions. The Bollinger Bands show that the price has recently touched the upper band, suggesting a potential for a pullback. Considering these factors, my strategy involves a combination of RSI and Bollinger Bands indicators. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, aiming to capitalize on a potential bounce. Specifically, I recommend entering a long position at $2,550. Given the support price of $1,820, we will set a stop-loss order at $2,380 to limit potential losses. The target price will be $2,680, aligning with the recent resistance level and the upper Bollinger Band. This strategy aims to capture a portion of the anticipated upward movement while mitigating risk through a well-defined stop-loss level. The predicted forecast price for the next few days is around $2,550, which is a good entry point. Based on the historical data and forecast, XRP shows a slight downward trend, but the recent price action indicates potential for a bounce. The RSI readings are mostly below 50, with a few days nearing overbought conditions, suggesting a possible short-term recovery. The Bollinger Bands have been widening, indicating increased volatility, and the price has been fluctuating around the middle band. Considering these factors, I propose a strategy combining RSI and Bollinger Band signals. First, we will initiate a long position at $2.14 when the price touches the support level and RSI is below 40. The stop loss will be set at $2.08, just below the lower Bollinger Band, to protect against a further decline. The initial target price will be $2.24, the resistance level. To maximize returns, we'll implement a dynamic target strategy. If the price reaches $2.24, we'll move the stop loss to break even and set a new target at $2.32, aligning with the upper Bollinger Band. If the price fails to reach $2.24 and shows signs of reversing, we'll exit the position at $2.16. This combined strategy leverages both momentum and volatility indicators to capture potential short-term gains while mitigating risk. The portfolio will allocate 60% to this strategy, with the remaining 40% held in cash to capitalize on potential dips or alternative opportunities. Based on the historical data and forecast, BNB shows a slight downward trend. The price has been fluctuating within the range of $645 to $673, with the RSI indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Given the forecast prices are consistently below the recent closing prices, and the RSI is hovering around the mid-range, I recommend a cautious strategy focusing on short-term opportunities. I suggest entering a short position at $648, placing a stop loss at $654 to protect against unexpected upward movements, and setting a target price of $641 for a conservative profit. This strategy leverages the downward forecast and the recent price action, aiming for a quick profit within a volatile environment. To optimize the portfolio, I suggest a combined approach incorporating all three signals. A long position should be initiated at $644, with a stop-loss order placed at $648 to mitigate potential losses. The target price for this long position is set at $654, aligning with the support level and the RSI's potential for a bounce. This strategy combines the downward forecast with the RSI and Bollinger Bands, aiming for a balanced approach that can capitalize on both upward and downward price movements. This combined strategy offers a more robust approach to trading BNB, incorporating multiple indicators to enhance decision-making and risk management. Based on the historical data and forecast, Solana demonstrates a fluctuating trend with periods of consolidation. The RSI consistently remains below 50, indicating a generally oversold condition, with dips below 40. The Bollinger Bands show that the price has been oscillating within a range, nearing the lower band recently. Given this, I recommend a long position strategy. Entry price should be $147, leveraging the current oversold condition. The stop loss should be set at $144, just below the support level, to protect against potential downside risks. The initial target price can be $150, aligning with the recent resistance level. To refine this strategy, I will incorporate a dynamic target price based on the Bollinger Bands. If the price reaches $150, move the stop loss to the entry price of $147. If the price continues to rise and touches the center of the Bollinger Bands, which is currently around $154, adjust the target price to $154. This approach allows for capturing additional gains while managing risk. If the forecast price continues to decline, the stop loss will be triggered, limiting potential losses. The combination of RSI, Bollinger Bands, and support/resistance levels creates a robust and adaptable investment strategy. Based on the historical data and forecast, TRON shows a sideways trend with support around $0.27 and resistance near $0.274. The RSI fluctuates between 46.8 and 67.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively stable, with the price generally trading within their range. Given this information, I recommend a neutral to slightly bullish strategy. We will initiate a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, which is around $0.261. The entry price will be $0.261. To manage risk, place a stop-loss order at $0.258. The target price will be $0.274, aligning with the resistance level. To further refine this strategy, we can implement a second layer of confirmation. If the RSI remains below 50 for 2 consecutive days and the price stays below the middle Bollinger Band, $0.271, we will enter a long position at $0.262 with a stop loss at $0.26 and a target price of $0.274. This dual confirmation approach minimizes false signals. The overall portfolio will be 60% allocated to the first strategy and 40% to the second strategy, aiming to maximize potential returns while managing risk effectively. This balanced approach caters to the sideways market conditions and provides opportunities for profit while protecting against adverse price movements. Based on the historical data and forecast, Dogecoin exhibits a downtrend with decreasing forecast prices. The RSI consistently remains below 50, indicating a bearish sentiment and suggesting potential for further decline. The Bollinger Bands show that the price has been approaching the lower band, which can signal a potential bounce, but the forecast suggests continued downward pressure. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.172, placing a stop-loss order at $0.175 to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.166, aligning with the forecast price and providing a reasonable profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 20, oversold, which hasn't occurred in the recent history, we could consider covering the short position or tightening the stop loss. Conversely, if the RSI approaches 80, overbought, which is also unlikely given the current trend, it would signal a potential trend reversal, prompting us to exit the short position. The Bollinger Band strategy will be used as a confirmation tool. If the price breaks below the lower Bollinger Band, it strengthens the bearish signal and supports maintaining the short position. This combined approach aims to maximize returns while effectively managing risk in this volatile market. Based on the historical data and forecast, Cardano shows a downtrend, with the forecast indicating a continuous decline towards $0.597. The RSI consistently remains below 50, often in oversold territory, suggesting potential for a bounce, but the overall trend is bearish. The Bollinger Bands are narrowing, indicating decreasing volatility, and the price is nearing the lower band, reinforcing the bearish outlook. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.629, with a stop loss placed at $0.641 to protect against a potential short-term reversal. The initial target price will be $0.607, aiming to capitalize on the forecasted decline. To refine the strategy, we will incorporate a dynamic adjustment based on the RSI. If the RSI rises above 50 during the trade, we will immediately move the stop loss to the entry price of $0.629. If the price reaches $0.607, we will reassess the situation. If the RSI is below 30, we will set a new target price of $0.597 to capture further potential downside. Conversely, if the RSI exceeds 50, we will close the position and secure profits, acknowledging a potential trend reversal. This adaptive approach aims to maximize returns while mitigating risk in a volatile market. Based on the historical data and forecast, Sui shows a downtrend, with the forecast prices consistently below $2.9. The RSI indicates that the asset is generally within the neutral range, occasionally dipping towards oversold conditions but not consistently. The Bollinger Bands show a narrowing range, suggesting decreasing volatility. Considering these factors, a cautious approach is warranted. I recommend a short position strategy with an entry price of $2.99. A stop loss should be set at $2.93 to limit potential losses if the price unexpectedly rises. The initial target price is $2.86, aiming to capitalize on the predicted downtrend. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI reaches below 20, indicating an oversold condition, we could consider covering the short position or taking profits. Conversely, if the price touches the lower Bollinger Band, it might signal a potential bounce, prompting us to adjust the stop loss or consider a partial exit. The second target price is $2.82, allowing for further profit if the downtrend continues. This portfolio combines trend analysis, technical indicators, and risk management for a balanced approach. Based on the historical data and forecast, Bitcoin Cash exhibits a clear uptrend. The price has consistently moved above the support level of $450 and is approaching the resistance level of $489. The RSI indicates that the asset is currently within a neutral range, but trending upwards, suggesting that we are not yet in an overbought or oversold territory. The Bollinger Bands show that the price is moving within the bands, indicating volatility. Given the forecast predicting a rise to $485 within the next week, I recommend a long position. My strategy involves entering a long position at $456, placing a stop-loss order at $440 to limit potential losses. The initial target price is set at $470, aiming to capitalize on the short-term upward momentum. If the price reaches $470, I will consider moving the stop-loss to break even, around $456, to protect profits. A secondary target price is $485, aligning with the forecast and the potential to reach the resistance level. This strategy combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk. Based on the historical data and forecast, dYdX shows a downtrend, especially with the recent forecast prices consistently below $0.52. The RSI indicates oversold conditions with values fluctuating between 37.2 and 53.6, currently around 40.4, suggesting potential for a short-term bounce. However, the Bollinger Bands show the price nearing the lower band, reinforcing the bearish outlook. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a short-term rebound before the overall downtrend resumes. My strategy is to enter a long position at $0.512, anticipating a slight price increase due to the oversold RSI. A stop loss should be placed at $0.496 to limit potential losses if the downtrend continues. The target price is set at $0.52, aligning with the forecast price and the middle of the Bollinger Bands. This strategy offers a relatively quick profit opportunity with a defined risk-reward ratio, suitable for a volatile asset like dYdX. This approach balances the potential for a short-term gain against the prevailing bearish trend, maximizing efficiency. Based on the historical data and forecast, PAX Gold shows a slight upward trend with periods of consolidation. The RSI fluctuates between 55.9 and 68.5, indicating neither extreme overbought nor oversold conditions consistently. The Bollinger Bands have widened recently, suggesting increased volatility. Considering the current RSI around 55.9 and the forecast prices slightly decreasing, I recommend a cautious long position. We will enter a long position at $3,420 with a stop loss at $3,370, coinciding with the support level. The initial target price will be $3,480, aligning with the recent resistance. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, which is around $3,360 in the forecast, it could signal a potential bounce. However, given the slight downward forecast, I'll maintain the stop loss at the support level of $3,370. If the price reaches the resistance of $3,480, we'll take partial profits and move the stop loss to break even. For a more aggressive approach, if the RSI moves above 70, we'll consider closing the position and re-evaluating the trend. The final portfolio will be 70% long PAX Gold, 20% in cash, and 10% in a hedging instrument like a short position in a correlated asset. Based on the historical data and forecast, NEXO exhibits a sideways trend with price fluctuations between the support of $1.21 and the resistance of $1.26. The RSI consistently hovers around the 44 to 54 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. The forecast for the next week predicts a price range between $1.20 and $1.22, reinforcing the sideways trend. Considering these factors, I recommend a short-term, range-bound strategy focusing on capitalizing on minor price fluctuations. My proposed strategy involves a combination of RSI and Bollinger Band signals. We will initiate a long position when the price touches the support level of $1.21 and the RSI dips below 40, aiming for a target price of $1.24. The stop loss will be set at $1.20 to mitigate potential losses. Conversely, we will consider a short position when the price approaches the resistance level of $1.26 and the RSI exceeds 60, targeting $1.23 with a stop loss at $1.27. This combined approach leverages both technical indicators to identify potential entry and exit points within the established trading range, maximizing profit while minimizing risk. Based on the historical data and forecast, Eigenlayer shows a downtrend. The price has been fluctuating within a range bounded by support at $1.18 and resistance at $1.38. The RSI indicates oversold conditions on several days, but currently sits at 42.3, suggesting limited downside momentum. The Bollinger Bands show that the price is nearing the lower band, which could indicate a potential bounce. Considering the forecast, which predicts a further decline to $1.22, a cautious short position is warranted. Therefore, I recommend a short position with an entry price of $1.24. Given the support level at $1.18, a stop loss should be set at $1.26 to limit potential losses. The initial target price should be $1.22, aligning with the forecast. If the price action shows signs of reversing and approaching the resistance level of $1.38, consider closing the position or adjusting the target price accordingly. This strategy combines the RSI's oversold signal with the Bollinger Band's indication of a potential bounce and the forecast's downward projection, aiming for a high return, risk-managed trade. Based on the historical data and forecast, BNB shows a slight downward trend. The price has been fluctuating within the range of $645 to $673, with the RSI indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Given the forecast prices are consistently below the recent closing prices, and the RSI is hovering around the mid-range, I recommend a cautious strategy focusing on short-term opportunities. I suggest entering a short position at $648, placing a stop-loss at $654 to protect against unexpected upward movements, and setting a target price of $641 for a conservative profit. This strategy leverages the downward forecast and the recent price action, aiming for a quick profit within a volatile environment. To optimize the portfolio, I suggest a combined approach incorporating all three signals. A long position should be initiated at $644, with a stop-loss order placed at $648 to mitigate potential losses. The target price for this long position is set at $654, aligning with the support level and the RSI's potential for a bounce. This strategy combines the downward forecast with the RSI and Bollinger Bands, aiming for a balanced approach that can capitalize on both upward and downward price movements. This combined strategy offers a more robust approach to trading BNB, incorporating multiple indicators to enhance decision-making and risk management. Based on the historical data and forecast, Jito shows a clear upward trend, supported by consistent price movements above the 2.12 support level and nearing the 2.24 resistance. The forecast for the next week predicts continued growth, with prices ranging from $2.2 to $2.38. Considering the RSI values, which have mostly remained between 40 and 65, indicating neither extreme overbought nor oversold conditions, we can implement a strategy that capitalizes on the upward momentum. The Bollinger Bands also suggest a bullish outlook, with the price consistently fluctuating within the bands and occasionally touching the upper band. Therefore, I recommend a long position strategy with an entry price of $2.2 on June 18, 2025, with a stop-loss set at $2.12 to protect against potential downside risks. The target price for this trade should be $2.38, aligning with the forecast for June 24, 2025, aiming for a substantial return. To refine this strategy, we will incorporate RSI signals. If the RSI dips below 20, oversold, we will enter a long position at the lowest price, with a stop-loss at $2.12 and a target price of $2.3. Conversely, if the RSI exceeds 80, overbought, we will consider a short position, but given the prevailing bullish trend, this is less likely. The Bollinger Bands will act as a confirmation tool. A break above the upper band, $2.31 on June 17, 2025, would further strengthen the bullish outlook and potentially increase the target price to $2.4. This combined approach, integrating RSI and Bollinger Bands with the overall trend analysis, will maximize potential returns while mitigating risks, resulting in a high-return investment portfolio for Jito. Based on the historical data and forecast, Bitcoin Cash exhibits a clear uptrend. The price has consistently moved above the support level of $450 and is approaching the resistance level of $489. The RSI indicates that the asset is currently within a neutral range, but trending upwards, suggesting that we are not yet in an overbought or oversold territory. The Bollinger Bands show that the price is moving within the bands, indicating volatility. Given the forecast predicting a rise to $485 within the next week, I recommend a long position. My strategy involves entering a long position at $456, placing a stop-loss order at $440 to limit potential losses. The initial target price is set at $470, aiming to capitalize on the short-term upward momentum. If the price reaches $470, I will consider moving the stop-loss to break even, around $456, to protect profits. A secondary target price is $485, aligning with the forecast and the potential to reach the resistance level. This strategy combines trend analysis, technical indicators, and forecast data to maximize potential returns while managing risk. Based on the historical data and forecast, DeXe exhibits a declining trend. The RSI consistently remains below 34, indicating an oversold condition. The forecast predicts a further decline, potentially reaching $7.21. Considering the support price of $8.58 and the RSI below 20, I recommend a long position when the price hits $8.78. Place a stop-loss order at $8.58 to mitigate potential losses. The initial target price should be $9.38, aligning with a recent resistance level. To refine this strategy, we'll incorporate Bollinger Bands. When the price touches the lower band around $6.32, it signals a potential reversal. If the price declines further to $8.04, enter a long position with a stop-loss at $7.95. The target price for this trade would be $8.33, aiming to capture a short-term bounce. Combining these strategies, the most efficient portfolio will involve a long position at $8.78 with a target of $9.38 and a stop-loss at $8.58, supplemented by a smaller long position at $8.04 with a target of $8.33 and a stop-loss at $7.95. Based on the historical data and forecast, TRON has shown volatility with a recent downtrend. The RSI indicates oversold conditions with values consistently below 45, suggesting a potential bounce. The Bollinger Bands show that the price is approaching the lower band, reinforcing the possibility of a short-term reversal. Considering these factors, I recommend a long position with an entry price of $2.95. Place a stop-loss order at $2.88 to limit potential losses if the downtrend continues. A reasonable target price would be $3.21, aligning with the resistance level, giving a potential profit of $0.26 per coin. To maximize returns, I suggest a combined strategy utilizing RSI and Bollinger Bands. If the RSI moves above 40 and the price touches the lower Bollinger Band, enter a long position at $2.95. The stop-loss should be set at $2.88, and the target price at $3.21. This combined approach leverages the strengths of both indicators to identify high-probability trading opportunities. This strategy offers a balance between risk management and potential profit. Based on the historical data and forecast, Uniswap shows a clear upward trend, particularly evident in the recent price surge and the consistently positive forecast for the next week. The RSI readings have generally been trending upwards, indicating increasing momentum, although they occasionally dip below 60. The Bollinger Bands have also widened, suggesting increased volatility and a potential for further price movement. Considering the support price of $7.09 and the recent price action, I recommend a long position strategy. We will enter a long position at $7.41 with a stop-loss order placed at $7.09, just below the support level. The initial target price will be $7.85, aligning with the forecast for June 24, 2025. To refine this strategy, we can incorporate the RSI and Bollinger Band signals. When the RSI falls below 45, indicating an oversold condition, we can consider accumulating more shares. Conversely, when the RSI exceeds 75, signaling an overbought condition, we can consider taking profits or tightening our stop-loss. If the price touches the lower Bollinger Band, it suggests a potential buying opportunity, while touching the upper band might indicate a selling opportunity. For this strategy, we will maintain the initial entry at $7.41, stop-loss at $7.09, and adjust the target price to $8.18 based on the upper Bollinger Band from June 10, 2025. This combined approach leverages both trend analysis and technical indicators for a more robust and potentially higher return investment.